The Commonwealth was not the only company out today with profits. So in this early part of the reporting season, let's try to get a sense of the health of corporate Australia with Bei Liu, lead manager of the Tribeca Alpha Plus Fund. Bei, always good to chat to you about this. I mean, we've only seen a few of them so far. So quarterly from NAB, we saw Computer Share, we saw the other day REA Group. I mean, again, it's as was expected that these would be pretty strong results, but everything was going to be about the outlook.
You're absolutely right. Look, so far we've seen fantastic results from all of them. If anything, the trading update so far, so the trading in July and so far in August is actually even stronger. So, net, has it yielded much share price reaction? Only a little bit. It's really the outlook that matters. And so far, the outlook is still somewhat cautiously optimistic just because trading's update is pretty strong. And we expect a similar sort of theme to continue throughout this reporting season as we hear more out of the consumer-facing stocks, such as JB Hi-Fi and others.
So the interesting part about, say, the banks, the NAB, when it put out its result, saw a result which basically pushed its share price down. The Commonwealth, it was pretty much mixed today. It's ended up a little bit down, but not terribly much. But the Commonwealth Bank's result today shows just astonishing health of not just the bank. Return on equity is 12.7%, which is rising. Dividends up as well. So, again, REA Group, I don't think I've seen a company in as rude a health as that for a long, long time. So it's interesting just to note the power of this. And the question is, if the consumer can hang in there, if the jobs can hang in there, there's no reason why some of these companies right now, after having been sold off, aren't reasonable bargains for some people.
Oh, look, absolutely. Even if you look at Computer Share result today, they guided to 55% increase in EPS, and share price was down as much as 7.5%. Just incredible growth numbers just because, expectations already there. So now they're being sold off. I absolutely agree with you. I think at the moment, market is very much driven by sentiment. They're trying to second guess what might come in the next 6 months. But if the consumer holds in, which so far it looks like it is actually pretty strong, we probably will have a good September quarter as well from the consumer. And if the rate increase doesn't go any beyond what is expected at the moment, and hopefully inflation does come off on the back of the commodity weakness, we actually might have a pretty good year for the corporate Australia.
There's one other aspect of this, and that is that I know that long-short funds, they obviously try and make their money when share prices are falling. But I notice even in a stock like Polynovo in recent times, which is one of the favourites that short sellers get stuck into. But as it comes out with better results, basically that share price has bounced pretty significantly off the back of better results. And that is not just people buying in because they like the prospects. It's also short sellers having to buy back in reverse positions where they were trying to make money from a falling share price.
You're absolutely right. So this is the whole GameStop issue again, all over again. We are seeing most heavily shorted stocks, probably the top 10 heavily shorted stocks moving up significantly in the last, not couple of weeks, the last month and a half. And last couple of weeks it has been really accentuated, really ever since Kogan reported its trading update and up 50%, 50. And that has really spooked a lot of short sellers to trying to cover their position. Now, one thing to be mindful, if a company's earning does exceed expectations, then these share price will continue to rise. However, if it is just really short seller covering their position ahead of the result and the result still disappointing, then the share price will come back because short sellers really are not the natural sellers and all of that. So still do your homework, find the company that earnings will need to whether meet expectation or exceed for the share price to rise consistently.
Okay, in these next few days, I know there's a raft of companies coming out next week. There's Telstra in the next day or so. There's a few others coming out. Have you got your eye on anything you think that investors should keep an eye out for?
Look, absolutely. I think Telstra will have a very good result and probably for the first time in quite a while to have a rise in dividend yield. Now, Telstra is very well positioned for a defensive position. I think it looks incredibly, looks really, really well. Next few days, we will hear a bit more from the consumer stocks. I think with consumer stocks, we know the result will be fantastic. JB Hi-Fi is already pre-guided, but it's all about the outlook. And outlook at this point, like you said, it will be pretty good. So I do think that the corporate earnings is on the way up next few weeks, next few
June
days.
Bei Liu from Tribeca. Always good to have you on the program and your perspective. Many thanks for your time today.